Hi, it is already November 3, 2023. So we're nearing the end of the year. And what a difference a week makes. Let's take a look at the market charts overall for the week, how they've changed, and let's just go over it. Okay. Okay, so it's November 3, 2023, and so far the performance for this week for the S&P 500 is up 3.4%. For the US Composite Index, it's about 4.11%. You've got the Nasdaq rising the highest at 4%. The Dow Jones is up also 2.5%, and these are all happening in just a week. A lot of those gains happened in just 2 days. Now the volatility index crashed 28% for the week. You've got UK indices, the German DAX, you've got the FTSE CAC, all rising 1, 2, 3%. You've got Nikkei up 3.39% for the week. You've got Shimton, Shanghai, it's all up 1.76% and 3.34%. For the week, indeed, there was a massive rise, and it can be shared that the dollar peso also in the Philippines dropped a buck from about 57 to about 56 as we had a holiday and a lot of people decided to sell the dollars after the Fed paused all the interest rates. And you can see that the market views that that would be a rate peak. You can see that as of the last few days, Shopify shares surged 22% on earnings beat and rosy guidance. A lot of the small mid caps, Russell 2000 names have gone up. And it's really massive from about 10 to even as high as 40% for some names on impressive numbers. Impressive multi-pronged margin surge drives strong results. You've got Roku stock soaring 30% in a single day on a third quarter revenue beat, a solid outlook. You've got Square also rising 25%. All of these things that are happening are really telling you how oversold most of the micro caps and small and mid caps have been. Thus, a strong guidance and a strong revenue beat is sending those shares surging 20, 30, 40% higher. Look at the movements as of last night. The highest moves on the day, this is just one day. You've got RTC rising 48%. You've got Lemonade rising 47%. Perhaps some names we don't know exactly who they are, but Roku, of course, everybody knows Roku. It's up more than 40% for just this week, with a bunch of those gains all happening last night after the numbers came out. You've got Viacom 25% up. You've got Shopify 28% up. Look at that, Lee Cycle up 20%. You've got companies like Palantir rising 18% for this week. You've got a company like Heliogen. It's rising towards 33% this week. A lot of them are also very, very beaten down names like Level, like Affirm. Affirm is up 20% for this week. Beyond Meat also surged 23%. So some names, even if they are down 90% year to date, they're rising like zombie moves. Look at the movements, performance year to date, they are red. But last night, the performance of the week was massive. You've got Red Robin Gourmet Burgers rising 25% in a single day. So you can see that most of the movements have been broadly strong for the small names, small and mid cap and micro cap names. DoorDash was up 24% for the week. Carvana surged last night 15% to make the week just up 3%. You've got ChargePoint rallying 16% for the week. Fastly up 16% for the week. Fubo up 12%. There's just quite a lot of movements on the small cap space. And most of them performing year to date and on a year on year basis are all red. So we're seeing some short covering, some lifting up. And on the Russell 2000, you can see 100 names all in this week gaining a lot, like top gainers. When you say it's top gainers, it's up 10% or more in a single day. So this has been quite a broad-based move in general for the Russell 2000. And you can see these moves all throughout. So let's explain what happened. You've got the S&P 500 right now very high at about 4,340, looking to hit 44. The non-farm payrolls already came out actually with a weaker 150,000. jobs less than expected, and that actually made the market even go higher, extending the gains, thinking that the Fed indeed has no way to continue raising rates since the market is already teetering. You've got bad news equals good news. Less jobs added equals the market will not hike rates any further. You've got treasury yields falling as Powell is softening his view on the inflation threat. The Fed leader said on November 1 that in the inflation fight, it does feel like the risks are more two sided now. So, in general, the market saw or perceived what Powell was saying as very dovish, sending treasury yields to fall very, very massively from near 5% to about 4.5% in just 2 days. This is your dollar index. If you're wondering why the dollar peso went from 57 to 56, just take a look on September, October, November. The dollar actually peaked there, and it sent actually the DXY from about 115 all the way to 100. Nowadays, people are assuming that the dollar is also peaking here at 107, which could send emerging market stocks and emerging market currencies a strong lift if the dollar weakens a bit. So if the dollar weakens from about 107 to as low as 105 to about 100, then maybe we could see a stronger rally in emerging markets, especially since most emerging markets are coming from standard deviations that are very cheap from historical valuation. You're seeing US government bond yields. Take a look on a 1 year chart. This is your October, November area where your US government bonds were trading at a peak of 4.5%. This year, yes, there was actually an increase on US 10-year government yields to as high as 5%. And as we noticed over the last 2 days, this 5% quickly dropped from about 4.5%. Investors now believe that the high yield rates have peaked. And you saw what happened when the high yield rates have peaked. That marked a short term bottom, at least in the markets. And so if 5% goes down to 4%, you know what the market will do. They'll buy staples, they'll buy utilities, they'll buy stocks that provide 4% dividend yields or more, which can continually keep on raising those dividends over time due to their brand and earnings power and their ability to command hikes in prices without affecting volume, i.e., inelasticity. So you're seeing actually what happened on November 3. Although the A shares on a week-on-week basis has not rallied, we do expect that at some point in time, maybe this index, which are the A shares, will also rise, as you've seen the Shanghai index a while ago rising 3%. Nowadays, you're also seeing at S&P 500. Take a look at the movements from 4,100. It quickly bounced back above 200-day, above that 420 magical sand line in the sand, and now it's trading back towards 440, which is your first resistance. And if you manage to break above it, then it's 445. So is that the short-term rally that makes us go all the way to 455? It could, depending on how great the next few earnings and numbers are. You've got the QQQ. You see that this one has essentially gone from 340s to about 360s. The next question is, can this go to 380s, knowing that the next earnings is NVIDIA, because Apple already reported weak numbers. So we already know that Apple is weak, Microsoft is strong, Meta has been relatively strong and thus went up back again. You've got Google quite neutral and steady there. You've got Amazon strong. Tesla was weak, but we're seeing that Tesla also rebounded back towards the 215 area. So that's why you're seeing the NASDAQ here. There is some pressure here at 15,200, and there are still further selling pressure here at 15.5 and 15.7, only because so far there are still a lot of people still skeptic on the semiconductors, especially NVIDIA, on whether it can continue new highs. Okay, let's take a look on your expanded tech software sector ETF. You're seeing actually that IGV, it's a lot of weakness. It's been lower highs and it's just been range bound. And you can actually see that based on names that companies like Atlassian, companies like Datadog, companies like Cloudflare, they're not that strong compared to your other software names. You've got the Russell 2000, as I said yesterday and the last few 2 days this week. This was actually a very, very powerful rebound for the Russell 2000, going from 162 to 170, which is actually a 5% increase, stronger than the S&P 500 and stronger than the NASDAQ move. So far, if the money will rotate towards Russell 2000 after getting oversold, you may see this pop all the way to 180. That's why I would recommend those who are owning small and mid cap shares to continue holding them first, because you've seen that there has been strong rebounds every time it bounces in the $160 area. Again, this tells you that the Bulls and the Bears are still in a rebound match. It's in a ping pong match where the Bulls dominate the 160. The 180 is just the median line, and near 200 or 190 is where the resistances really lie. So it's just a box. Now for microcap ETF, names you're seeing actually a very strong, powerful rebound. But yes, the bears are still the strong ones here, because even rebounds towards 100 or 105 will be quickly met with some downtrend ranges for the microcaps. Let's take a look at semiconductor names. You're seeing semiconductor names rally from about 3.1 to as high as 3.4. It could continue higher if Nvidia does well, but you're seeing from a from a short-term basis, a lot of semiconductors are still exhibiting lower highs, which makes it skeptical that it could be a rally to be short-lived for semiconductors. And take a look at the daily semiconductor bears. Yes, it went as high as 15, nearing 15 here, touching that 200-day moving average, getting rejected. But so far, if daily semiconductor bearish ETF starts rising back again, it may actually pierce this 15, meaning if Nvidia suddenly breaks down, then you know what's going to happen to this semiconductor bear ETF. Let's take a look at some ACMR research. Notice that on October 27, this was trading at $17.50. That was a lower high, and it actually had a peak here at 22, short-term high. What happened on November 3? After earnings, this dropped from 17.50 all the way to 14 and 13, which tells us that semiconductors indeed have a lot of negative headwinds as well. And just because NVIDIA is strong doesn't mean that all the companies in the semiconductor index will go higher. So we're seeing actually that there is some move to the downside towards ACMR. Take a look at NVIDIA, still very strong. Last week it was 403. This week it's already bounced higher towards 435. So still very comfortably above the 200-day moving average. And NVIDIA is going to be reporting on November 21. Noticing this, we can say that NVIDIA is still one of those strong names that could even retest as high as 480 or even 500 prior to the earnings. People might buy the news, buy the rumor, or buy before the news and then sell on the news, which is the earnings date. Take a look that when Broadcom was going down towards 826 because of NVIDIA rallying up made this also go up towards 870. So far we're seeing a high, very, very high correlation between Avgo or Broadcom with NVIDIA. And so this one looks to be just range bound so far. AMD has been weak at 94 and then suddenly rallying all the way towards 107 after earnings. That said, even if earnings actually propel this to go 107, 112, take note that AMD has to sustain above 100 and really trade back towards the 120s before we can say that AMD's weakness is finished. Here, this is Marvell Technology. We saw the weakness towards 46 from 68 to 46. And then even after the numbers, the numbers haven't been released, so Marvell is still actually teetering to the downside. So this just goes to show that even if other names are already strong, names like Marvell is still below 200-day moving average. You've got Intel beating expectations, thus bouncing from 32 to 35, and this week this continued all the way towards 38. However, the next battle is at 45 and 40, so there's still a lot of resistances for semiconductors. You've got Taiwan Semiconductor. Last week, this was teetering near 87. Nowadays, TSM is at $90. It is a strong rebound. It's a rebound of 5%, but not strong enough to actually derail this downtrend that we're still seeing on TSM on the back of pretty weak numbers from Apple. This is Skyworks Solutions. Take note that from 200, it has already collapsed towards 88. That said, Skyworks is still at 88 and 89, showing that there is real weakness in the semiconductor sector. This is Qorvo here at 86. Yes, it rebounded a bit, but still here at 85. After rallying towards 90, it got quickly sold off. That one is another indication that we are not out of the woods, at least for the semiconductor names. Your Applied Materials has found some support here at 130 last week and then bounced towards 138. So this was just more of a predictable bounce based on the 200-day moving average just yet. No earnings yet from Applied Materials. For oversold names like Qualcomm, after hitting 105, this rebounded at 117, comfortably just trading back towards the 200-day MA. When it's trading just near 200-day moving average, we can only say that, hey, this could be a rally that is still up to question on whether those earnings truly can break all the way towards 130s. ASML, you can see below moving average shared about 588. What happened the week after? It's still below moving average, even if it rallied $50 towards 630. And you can see those resistances patterns are still there. How about connected TVs and toys? Comcast Corporation had a gap down here. What happened after? Well, there was a gap fill. So after gapping down from about 44 to 34, 38, it rebounded all the way back to 42, which is still downtrend if you'll notice for Comcast. Roku was in a downtrend, a very strong downtrend, dropping from 90 all the way to 50s. And after report, yes, from 50, it did rally back to 78, which just this essentially is back in the middle part. All it did was essentially share that it's not going to go down to 50s, but it's still in a sideways and more of a range bound item for Roku. You've got Mattel dropping here at 17.18. What happened the week after? Still rallying, but still a gap fill that just is below and still downtrend. So you're still seeing that the bears do have some sense of bearishness and control over names like Mattel or Hasbro. This is Hasbro. It's down towards 48, near those 2020 COVID lows. 1 week after, it's still at that 2020 COVID lows here at 48, 46. It's still weak actually for Mattel and Hasbro. Look at Charter Communications. It's rallied from 411. It rallied towards 412. So nothing really, just a dollar. It fell down to 370 and just went back the same price. This is the trade desk. It was already teetering here at 66. What happened after? It's up, but 75, and it's actually still got a lot of resistances here at 80 and 85. What happened to Walt Disney after a week at $80? It's still there at 80 plus. It's just trading at 84, 83. It's just range bound for Walt Disney so far. Netflix rebounded on the good earnings. However, it's still below 440, and we're still seeing it trade in a range. This is your cybersecurity stocks. Look at Palo Alto Networks last week. It was trading at 240. This week, it's trading at 250, slightly higher. But after earnings, it went back down towards 240, which is basically unchanged, stating that cybersecurity names so far aren't moving in a very strong momentum manner. CrowdStrike is still there at about $180, 178, although we're seeing potential profit taking as well. This is your Zscaler from about 160. It opens at 152. So you're still seeing that there is a little bit of sideways action for cybersecurity names. How about for e-commerce and retail? C Limited was $41 last week. This week, it's still at 41.42, which shows to you that just because all other names have rallied, like Shopify, doesn't mean that C Limited is also going to go back up soon. So it's still actually in the nowhere zone with a lot of resistances here at $60. Shopify actually rebounded, as we said, very, very strongly. That was a very strong move here at $60. Quite great. However, it's still actually capped here at 70. And you've got actually quite a lot of resistances as well here at 61. So don't be too happy just yet. We need to see sufficiently strong buying action, and it might take a while for that to happen. So this was a strong gap up, and we have to wait it out. This is Wayfair. It was already trading at 39. What happened here was continuous drop. There was a rally from 40 towards 46, but still downtrend overall, still for Wayfair. Best Buy company was trading at 66 last week. It's still trading at 66 this week. So not all companies is doing well. PC shipments, electronics, we know the industry is not that strong. So even Best Buy as a retail firm is still below moving averages. Dick's Sporting Goods is below the 200-day, here trading at 104. And until this week, it's still down and it's still at 110. So it's just really trading within a range, but it's way below the 130, which tells us that the bears still have the upper hand for apparel and retail names on the athleisure space like Dick's Sporting Goods. Look at Lululemon Athletica. It was 388, 390 last week. Nowadays, it's at 404. Yes, it's been strong up, but still, it's just 1 to 2% higher. It's just really same with the beta of the SPY and the NASDAQ. This is your five below, trading at 173 last week. Nowadays, it's still trading at 170 plus at 176. So basically just unchanged. Mercado Libre rebounded from 1-1 all the way to 1-3, 1-4. And you're seeing that this is pretty strong, but still, it's just so far being capped, as we said, being capped here at 1-4, and the prior support of this double top becoming the resistance here for Mercado Libre. So be a bit careful, even with those strong movements and strong earnings. Amazon, yes, this rally from 120 all the way to 140. However, as you can see, capped again below 150 for Amazon, and a lot of resistances there at the 150 area. So it's not that all signs are clear yet for Amazon. This is Levi Strauss. It's been downtrend all the way at 13.14. And even until now, it's still at 13.14. TJX was trading at 88 last week. This week, it's trading at 90 bucks, still unchanged. You've got Ross stores trading at about 115. You can see it's just in a sideways area. Discount stores are sideways. And until this week, Ross stores is still sideways here at about 118. Etsy has been in a strong downtrend, trading at $62 last week. As of this week, Etsy is still low at 61. So it's still not really strong, even for names like Etsy. You've got companies like Target trading at 110 last week. Nowadays, even when the entire market was rebounding, Target is still at 111, showing no signs of bargain hunting just yet. Dollar Tree has been weak here at about 108. This week, it's still at 114. So there's some people picking up Dollar Tree, not as strong as any other name, but still weak, no? So you're seeing that Dollar Tree, Dollar General, these names are just really sideways so far. Elf Beauty is trading at about 104 last week. This week, despite numbers, it got sold off. It's trading at 98 and 90, and we're still showing downtrends on Elf Beauty. So it looks like good news is also being sold off for Elf Beauty. Ulta Beauty is still weak from about 560, it's about 380. We haven't seen any bottom just yet. It's still 380 this week for Ulta Beauty. Macy's department store has been weak from 38 all the way to about 11. This week, it's still weak at about 11 to 12. So very weak for department stores. Stephen Madden, the shoe company, is below 35 here, trading at 32. What happened this week? Well, it rallied back towards 34, but that's nothing impressive. It's just in a range. American Eagle Outfitters is trading at about $18 last week. This week, yes, it's pretty strong, but just at $18 as well, 18 and 30 cents. You've got designer brands, it's down. You've got from $32, it's now trading near $11. And this week, it's still there at about $10 and $11. So we haven't really seen a lot of buyers on shoes and consumer discretionary, except for a few names like Nike, etc. Okay. Wait up. There's no pause. Oh, wow. There's no pause. Wait. Okay, so sorry. There's no pause here, so I just have to resume with the yeah, here. There. Okay, so you can see apparel Ralph Lauren is just sideways here, trading at about 113. This is Victoria's Secret, very, very weak here at $18. Notice after a week, despite the Fed pause, it's still at 1860. So it's not as if like all stocks went up. You've got Tapestry dropping here towards 28. Luxury goods are still weak. What happened the week after? Still weak here at $27. How about Chinese stocks like Alibaba? It was 82 last week. This week it's still 83, 84, so nothing much of a difference. It's just been trading sideways for Alibaba, just trying to find a bottom at the $80 level. You've got JD that was weak at 25.26. Still this week, it's still trading there at 25.26. You've got payment firms like MasterCard dropping from 364, rallying back towards 380. Still, though, as you can see, that is still a downtrend for MasterCard. Visa is pretty strong and pretty decent, but still just trading there at $10 higher from 234 towards 243. You've got Coinbase last week trading at 75. This week it's trading at 85. However, notice there has been a lot of selling pressure at 90 and 110. So there's quite some range bound action there. For Square, aka Block, we saw it get oversold to new lows here at 41. That's why when it had a great number, it just went back towards the range of about 60. It hasn't even reached 60 just yet. It's just trading here at $50. And so we think that maybe Square, aka Block, can trade further towards $60 because of the good numbers. This is a firm trading from 17. After numbers, it went as high as 21. So that was strong. So far, actually, Affirm is the one that's doing better in the payment firms. Buy now, pay later seems to be getting a lot of short covering and quite a lot of earning surprises as well. Look at the apparel names. Nike, after reaching 105, 103, it dropped a bit last week and then rebounded back towards 105. However, there might be some pressure already here at 112. So let's see how things go. But consumer discretionary names, even if we like Nike, we do have to note that from oversold, it went to overbought. These things may not just go up all the way back soon, and you'll get some selling pressure here. This is Li-Ning, some Chinese firms reporting weak sales. Even after the strong moves of Nike, better than expected numbers, you'll see that they're just still trading but gap down. From the 24, at most it can rally to $30, but still downtrend overall for the industry. Same for Anta Sports, very weak downtrend in the industry, so that's weak even after 1 week. Abercrombie and Fitch has been the standout leader this month and this year. You can see that Abercrombie and Fitch has gone from $20 all the way to $60. No AI needed. All of this has to do with their sales doing well. However, just like with ELF bleeding after even good numbers, we do think that Abercrombie might get some selling pressure already here at 64 all the way down to 50s. So be careful. This week it's just trading there at 63 as well. American Eagle Outfitters trading at near $20 and $18 last week. This week it's still there at 18. Gap has been $13 last week. This week it's still there at $13.50. You've got Guess trading at about $21.50. This week just trading a dollar higher, so nothing substantial. Housing names, you've got Zillow still dropping from 56 towards 38. This week it's even worse towards 35. Yet, you've got home construction ETF names very, very strongly rebounding from 64 all the way to 70 plus this week. Actually, as high as $80 for Pult Group. You've got KB Homes going from 43 all the way to near $50. And you've got iShares Home Construction ETF rebounding from 70 to 80. So we did say last week that we do think that this home construction ETF has some decent legs on their rally, as a lot of people indeed have been buying all those houses and building those houses. So we expect a few of these ETFs to continue remaining pretty strong, just like how most of the mega cap 7 are still pretty strong and relatively being bought on drops. How about fast food sector? There are companies like Darden Restaurants wiping out those gains last week. This week, yes, it has tried to claw back some of those losses, but it's still below $150. And any rallies of Darden is suspect and skeptic for it. It could actually continue downtrend further. Blooming Brands has been on a downtrend, and you're seeing that it's still in a downtrend even this week. Wingstop is showing some weakness here at 185, and this week, although it rebounded towards 200, be careful. That could be a fake out. So let's watch because the entire industry is weak. You've got Celsius Holdings weak here at about $160. And this week, it's still trading at 170, 167. We do expect that this could actually get sold off, as we saw quite a lot of strong names and high multiple names get clobbered down. You've got Jack in the Box dropping here towards $60. What happened this week? It's still dropping there at 60, 64. So it's still weak. Dutch Bros, it's still weak here at 24 until this week, although there's a rally at 26, still there, low, very low. First Watch still low here at 17 last week. This week it's still low here at 16.66. Cafe de Coral rebounded a bit from $8 near 10, but nothing great to share. It's still below moving averages. That continued further, but still, as you can see, 200-day MA acting as the first resistance. Nayuki Holdings also trying to rebound from 374, but we can see strong resistance at $5 to $6. So it hasn't rebounded yet towards 5 to 6, but rallies we expect to have short-lived resistances out here. Heidi Lau also at 19. This week it's still actually weak from 19 dropping towards 17. So you can see that there is very lot of weakness. No, it's not as if it's very strong. Red Robin Gourmet Burgers has been in a downtrend, strong numbers, which sent the shares from 7 all the way to 9. But you can see below 11, it has been dropping all the way as like a knife that hasn't found any bid. Look at Chipotle. It's been dropping towards 1800, found a little bit of support there, rallied back on good numbers towards 2000, but 2001, how high will it go? New highs? We expected it would be cap gains even for Chipotle. This is Texas Roadhouse at about 95. It did rally this week, but at 105, you have a lot of resistance here. Papa John's is weak here at 63, and this week it's still weak here at about 63. You've got Shake Shack weak last week at 55. This week it's still weak at 56. Starbucks has been an outlier. From 92, it rallied back towards 100, but it's below moving average, so be careful. Yum China, this has been weak, and any rallies, we could still have some resistance at $60. And notice what happened with Yum China. From $50, it collapsed all the way to 45. McDonald's, you can see that at 256 last week, this could break towards 240. So be a little bit careful. It's been rallying to 267 to 270. But if you can see the other fast food stocks going down, this is not an easy walk in the park for McDonald's. QSR trading at 66 last week. Nowadays, it's still trading at 69. Domino's Pizza was trading at 345. This week, it's still 345, 348. Social media stocks like Snapchat rallied from 9 towards 10, but still very weak, as you can see. Pinterest was the strong one from 24 all the way to $30. However, at 30, I don't know if you will get clobbered at that 30 area. Magnite was weak, and this week it's still weak. Meta Platforms is sideways, and you can see that that's strong. Google is sideways. You've got a gap down, some resistance here at 140s, but overall being bought here at 120 as well. Magnificent Seven names in general. Microsoft has sold off towards 330 and then rallied back towards 350. But as you can see, we still are in a sideways range here. Just like Meta, sideways. You've got Nvidia, sideways. You've got Tesla dropping below 200 and then going back up, but still below the 220 area. It could even rally towards 240, but still a lot of resistances there. So just like Google, a lot of resistance at 136 and 140. AMD, lots of resistance at 110, as we said. Apple, a lot of resistance at 180 and still proving to be lower than 180, which is a downtrend. So Visa, strong, but capped gains. You can see that it's capped here at $250 at the meantime. A lot of cap gains for Netflix. Adobe also cap gains here at $560. Amazon cap gains at 145. Utilities and staples getting well bid. You see that $50 rallying towards 60 for next era, but at 70, lots of resistance. Brookfield getting a lot of bargain hunting buys. So these are all counter trend rallies. As you can see, these are still strong downtrends. You can see that last night, yes, consumer staples rallied after getting hammered a lot, but we should note they are all actually still below 200-day moving averages and actually are downtrends for the likes of Philip Morris, Conagra Foods, quite a lot of them, okay? Consumer staples at 68 could rally towards $70, but very, very small gains. It's not much to chase. Software names are getting gap downs, as you can see for Cloudflare, for Atlassian, they're getting gap downs, which means that after looking at so many charts and just showing to you all of that, We are still actually in a bearish market, coupled with a few names that are here and there going up a bit. So, although it's nice and exciting that the US 10-year yields have dropped from about 5% to 4.5%, we should be careful that these NASDAQ rallying towards 15,000 and 15,500 isn't going to be a walk in the park. Okay, so thank you very much and have a good evening.